This stock isn't trying to win the space race, it's building the infrastructure behind defense and autonomous systems. We're talking about Redwire Corporation, ticker RDW, trading roughly in that $9 to $10 range depending on the session. And this is not just a space story. This is a company attempting to turn a collection of orbital hardware, defense exposure, and manufacturing capabilities into a credible multi-domain infrastructure platform. And the market is still deciding whether to believe it. Quick reminder, before we go any further, I'm not your financial advisor. This video is for educational and informational purposes only and is not financial advice. Penny stocks and small caps are very risky and you can lose all your money. So always do your own research or talk to a licensed professional before making any decisions. This is a company building the power systems, components, and in-orbit capabilities that sit underneath satellites, defense payloads, and future autonomous infrastructure in space. Rockets get the attention. Redwire is what makes those systems actually work once they're deployed. And that matters now because space is no longer just exploration. It's becoming a persistent layer of global infrastructure tied to communications, sensing, and national security. Redwire is no longer just an orbital hardware supplier. It's positioning itself at the intersection of space infrastructure, defense systems, and autonomous data networks, the physical backbone that AI-driven systems will ultimately depend on. That's why this name fits the channel's lane. Now let's talk about why the market is starting to take this more seriously. The company is generating real revenue, just over $100 million in a recent quarter, and that revenue has been growing at a strong pace year over year. That's not typical for a small-cap aerospace name. At the same time, Redwire continues to carry a meaningful contracted backlog, generally cited in the hundreds of millions, which gives some visibility into future work. And you're starting to see geographic expansion, including moves tied to European defense programs, which suggests this is gradually becoming a more international story. So the setup is there. You have real revenue, forward demand, and increasing exposure to defense-linked systems. But the real thesis comes down to how these pieces fit together. The bull case here is built on 3 layers that stack on top of each other. First, this is a real operating business, not just a concept. Revenue is already at scale relative to its size, and the backlog suggests continued demand. That alone separates it from a lot of early-stage names that are still purely Second, the infrastructure relevance is real. Power systems like their rollout solar arrays are not optional. Every satellite, every sensing platform, every autonomous system in orbit needs reliable power. And once a company becomes embedded in that layer, it tends to stay embedded. This is where the story starts to look less like speculation and more like infrastructure. And this is the part most investors miss. Redwire doesn't need to dominate headlines. It just needs to remain inside the systems that matter. Third, there's the expansion into defense and multi-domain applications. A growing share of space activity is tied directly to national security, communications, surveillance, and persistent sensing. Redwire's components and capabilities sit inside that ecosystem. That means it's not tied to one mission or one launch provider. It's tied to the broader build-out of orbital and defense infrastructure. And then there's a fourth layer, but this is where you need to stay disciplined: in-space manufacturing. This is the optional upside, not the core thesis. If it works, it could shift the business toward higher margin services over time. But it's still early, and it shouldn't be the primary reason you believe in the story today. On paper, that's a compelling setup. But here's the problem. This entire story only works if execution holds together. If you're getting value from this breakdown, tap like and subscribe to Penny Stock Pulse. It really helps the channel and tells me to keep making these deep dives for you. Now let's walk through the risks, because this is where the tension sits. The first risk is capital intensity. This is still a hardware-driven business. It requires ongoing investment in engineering, testing, and deployment. That puts pressure on margins and delays the path to consistent free cash flow. The second risk is program timing and customer mix. A meaningful portion of revenue is tied to government and defense-related programs. That provides stability, but it also introduces variability. Revenue doesn't show up smoothly. It shows up when milestones are completed. And that can create quarters that look weaker than the underlying demand actually is. This is where the story gets harder. Because even strong aerospace businesses can look inconsistent on paper. The third risk is integration. Redwire has grown through acquisitions. That creates capability, but it also creates complexity. The entire platform thesis depends on whether these pieces actually come together into something more efficient and scalable. If they don't, you're left with a collection of assets instead of a true platform. And here's the key line that matters. If Redwire cannot convert its backlog into consistent, repeatable revenue while showing a credible path toward improved margins and cash flow over the next 12 to 18 months, the market will likely stop treating it as a platform story and start valuing it like a fragmented supplier. That's the fork in the road. Now let's talk about valuation, because this is where expectations become visible. At roughly a $1.3 billion market cap at current levels, Redwire is being valued at a few times annual revenue, depending on how you frame forward estimates. That tells you something important. This is not a distressed valuation, but it's also not pricing in a fully successful platform transition. And that's exactly where the opportunity and the risk sits. The stock itself has been consolidating in that $9 to $10 range, with $10 acting as a clear psychological level. If that level flips into support with sustained volume, it suggests the market is starting to assign more credibility to the story. If it doesn't, it tells you skepticism is still dominant. So what actually changes the narrative from here? Not concepts, not headlines. Execution. Specifically, 3 things need to start lining up. Revenue needs to convert more consistently from backlog into reported results. Margins need to show signs of improvement as the business scales, and the company needs to continue expanding its footprint across defense and international programs, reducing reliance on any single segment. If those pieces start to come together, the market can justify a higher multiple. If they don't, this likely remains a range-bound story. So who is this setup actually for? This is not a short-term trade for most people. This fits a longer-term investor who is comfortable with volatility and is specifically looking for exposure to infrastructure behind defense, connectivity, and autonomous systems. You have to believe that space becomes a critical extension of global infrastructure, not just for exploration, but for data, security, and persistent sensing. And more importantly, you have to believe that Redwire can execute its transition from a collection of capabilities into a cohesive platform. Because that transition is not guaranteed. And that's where most of the risk lives. So here's the bottom line. The bull case. Redwire is positioning itself as a real infrastructure layer across space and defense systems, with revenue, backlog, and growing strategic relevance already in place. The bear case. It remains capital-intensive, operationally complex, and still needs to prove it can execute consistently at scale. And what matters next? Whether execution starts to validate the platform story before the market loses patience. If you found this deep dive helpful, hit like, subscribe to Penny Stock Pulse, and turn on notifications so you don't miss the next under the radar breakdown. Thanks for watching, and I'll see you in the next video.